Hi, everybody. Charles Cannon, Certified Financial Planner for the Lifetime Income for You channel. It is Monday, August 5th. The markets opened with the NASDAQ down 6%, the S&P down 4, the Dow down 3. Why is that? Well, a lot of it is based upon the so-called Japan carry trade. It's something that we printed a video about last year where we interviewed an expert that told us that Japan carry trade, think of it like that game Jenga where you take out the blocks and finally everything falls over? When that Japan carry trade was going to come, it might bring all the markets down. Japan has lost 25% of their market value on the Nikkei over the last 3 trading days. I don't think we're going to have that big of a bloodbath here, but we do have the ripple effect because their interest rates were so low that institutional investors from all over the world, including the US, were borrowing money in yen, exchanging it into a different currency to invest in projects or even in stocks. And now that Japan has raised their interest rates, they're getting called and they have to sell securities or sell other things to meet their cash obligations. And that is triggering this worldwide sell-off right now. What does it mean for you? Number one, if you are already one of our clients, you are already invested so that a portion of your portfolio is providing you income and a portion of your portfolio is built for growth. And when you've done that, it means that you can withstand the downs of the market. We're trying to get as much over time upside of the market as we can, but that means that you've introduced some risk trying to get upside. But your income doesn't get affected, and therefore you can continue to stay invested. If you are out there and you are somebody and all of your money is in for example, the Vanguard S&P 500 fund, and you're just withdrawing a fixed amount every month, well, that dollar just became very expensive, folks, and it will continue to do so. Also, what does it mean for interest rate cuts? I kind of thought that the Fed was going to wait till November. It became apparent they were going to make a cut in September. It's now possible they cut by 50 basis points. If the markets continue to sink, right now the market has priced in 5 rate cuts between now and January of 2025. That means the market is kind of predicting recession, folks, right? Remember, we thought 2022 was a tough year, right? Minus 24 in the market. The Fed was even saying, Chairman Powell was even saying that to bring down inflation, they probably were going to have to introduce a recession. That didn't happen in 2023 because the Magnificent Seven, those AI stocks, carried the market forward so well that we never got to recession. Well, now the NASDAQ's starting to sink, including those top 7 stocks. Will we see recession in 2025? I don't know. Just like our expert, whose video you can see down below if you click on the link, was predicting this Japan carry trade last year. In fact, we printed that video last year, I think the week before Labor Day. We can't predict the time that things happen, but we can predict that they probably will happen. So we've got all of these issues. We've got this contentious presidential election. We've got the geopolitical issues. We've got our own inflation and interest rate issues. In fact, they want to cut rates, but they can't because inflation is still not under control. But if the markets continue to go down, they will absolutely cut rates. And then we're just perpetuating the issue, folks, because inflation is still moving forward, but we're cutting rates, which is meant to expand the economy even more, which means that it's tough to get that perfect control over all those things for the so-called soft landing. By the way, just like we said before, when things were going good, The presidential election is not going to have that much to do with where we are in the markets. Neither candidate is going to affect the answer of what the market does next very much. So separate that in your thinking. Concentrate on protecting your portfolio. Make sure that you have the income you need to get everything done that's on that bucket list, and also have enough to, in the future, take care of any aging issues and longevity issues that you may have. This is Charles Cannon, Certified Financial Planner. I want you to watch for our video later in the week where we will talk about the cons of investing, but today is a real good lesson in that too, right? Charles Cannon, Certified Financial Planner for the Lifetime Income for You channel. Remember, lifetime income is the most important part of your retirement. Have a great day now.